Hi everyone, Krugs here from Ace Trading. Today I'm going to introduce to you one of our new bots, the WaveBreaker version 2. So the version 2 is different from the version 1, but you can actually run both bots. So version 1 is its own separate entity, so it has its own purpose and its own breakout. Version 2 is a different bot, it has similar elements, but you can still run both bots, so please do not delete version 1 because it is a totally different bot. Today I'm going to talk to you about version 2. Okay, so you can see on the chart we have a 6A chart. So one of my favorite plays of the day is to catch the Australian market open, okay, which happens at 7 p.m. So we're nearly there, 7 p.m. Chicago time. So I believe that's 8 p.m. Eastern Standard Time. So I like to catch that Australian Open with either WaveBreaker or WaveBreaker version 2. But today, obviously, I'm going to talk to you about version 2 and show you the differences between the bots and how to add it to your chart. So you can see I've already got the chart set up. You don't need to have the wave indicators on. I have that on because I really enjoy checking out the support and resistance points. But again, if you want to make sure that you have actually imported the bot as an InterScript, okay, make sure you've done that already. And once you've done that, you'll find that when you right click the chart and go to strategies, you will find that you will have, and we'll scroll down, and we'll have Ace WaveBreaker version 2 managed. Okay, so we're going to add that to our chart. And on the right here, you'll see there are a lot more parameters for us to fill in order to get this bot going. And that is why this bot is an intermediate bot. It's that next level where it does take a fair bit of understanding in order to use it appropriately and correctly. So a bit of a warning there, make sure that you do trial this on sim accounts. I'm not giving you financial advice, but just showing you different ways that you can trade different charts. Okay, so we are trying to catch a breakout. So with a breakout on 6A, each tick is worth $5. So I want to understand how much I'm going to risk when I'm doing this, keeping in the back of my mind. Okay, the first thing I'm going to do is I'm going to start my bot at 7:05 p.m. Okay, we all know now after using WaveBreaker 1 version 1 that we need to make sure that we start it the next candle after the point we're trying to find. So we're on a 5-minute chart, so that means I need to make sure that I start my bot at 7:05, which will in turn start it at 7 o'clock to catch that breakout. Okay, I often like to run my bots for a 1 or 2 hours term. It doesn't really matter, but I'm just going to run my bot for the 1 hour because that is my general go-to. I don't like to take too many trades, and I like to be in control of how many trades I'm going to take. That'll generally get that one breakout. If you run it for 2 hours, it'll generally, if there is a turnaround in the market and price action comes the other way, it can potentially catch 2 breakouts. Okay, but after that, it shouldn't take any more. All right, and my candle count back is the standard hour, so I'm looking for that hour, so looking for the last 12 candles from 7 p.m. So you can see here on the chart we're roughly sitting at that nearly 7 o'clock. So what it's going to do is going to form a wave around these last candles. And one of the main reasons why I don't like using the surfer at the start of the day is you can see there's a lot of these little spike outs. It's because a lot of bots for the larger companies are closing off their orders at the end of the day, and you tend to get a bit of a fluctuation in here, a bit of volatility until the market starts to level out. Okay, and we're trying to catch that point where it starts to level out and take off in a direction. That's what we're trying to do with the WaveBreaker version 2. All right, there are 3 different ways that we can trade this bot. Okay, we can trade it with a take profit of our first take profit and our second take profit, and not trail, but just make sure that we have a break even stop loss. So it'll break once it breaks out, takes that initial stop loss, initial TP. We can then move to a break even for our stop loss and then try to aim for our second take profit. And there are 2 ways that we can trail. Okay, so as I said, there's 3 ways to trade this bot. I'm going to show you the most successful way and then go down from there. Okay, the most successful way that I have found trading this bot is using a trail stop type of previous candles. Okay, I'm going to explain this one the most and then talk about the others in a second. Okay, so I'm using a trailing stop. I generally, for the market, for the breakout, I usually like to do about 15 tick stop loss. Okay. Similar to the Surfer version 2, we're going to have a trigger Okay, but what I'm going to do is I'm going to aim for my first take profit. I'm going to aim for 3 ticks. Okay, I'm going to aim for 3 ticks. That means I'm going to set my trigger at 3 ticks. So once I hit that 3 tick, once that trigger point comes into play, that is when my stop loss will come into take action. Okay, I'm not going to have to worry about this parameter, the trailing stop loss, because I'm using previous candles. Okay, I generally like to go to 6 to 8 candles for my trail, and I'll explain that in a second. What that means. Actually, I'll explain that now a bit, and then you'll be able to see it in action. So what number of candles to trail means that if price was to move down this way and you were going for a short position in the market, as your price moved down and it passed its trigger, it would take the high point of the last 8 candles. So if we were at this candle here, it would calculate the 1, 2, it would include the actual candles, so 1, 2, 3, 4, 5, 6, 7, 8, and it would put the stop loss here. And as that candle moved to the next one down, maybe even moved a couple down, it would still, each time it moved a candle, it would calculate where the next stop loss should be, and it would move it down. It would move it from here to here, then back up. It wouldn't move it back up to here. What it would do is it's going to keep calculating the highest point of the last 8 candles. So it actually wouldn't ever get to this point, because that point there, if I was to look at these high points, and that one is now moved on, we've moved down an extra candle. This candle was higher than this one, so that's where the stop loss would move. Okay, it would move to the next point here, and then it would jump down. It would slowly move down until price came back enough to stop it out, and you'll see it in slow motion. And I'll show you exactly what. I'll go play by play so you can actually see it in action. Okay, but I generally like to go for that 3 tick take profit for the breakouts with 3 contracts. So I'm putting most of my money into that first initial play. Okay, and then the take profit of second one, I'm going to put this one quite large because I want it to trail, and I want to give it an option to go for that big one, because I've got a trailing stop. Okay, I'm only going to run it 1 contract on that trail. And then let's have a look, see we have everything done. So we're not going to use a break even on this one. We're going to have a stop loss of 15. We're going to have a trail using candles, a trigger 3 ticks. That's when the stop loss will kick in place, using 8 candles to trail. I have my TP set up. I have my contracts put in. I have my correct timing. I have my 12 candle count back. I'm on 6A, and I've got my account selected. I'm just going to run this in playback. Okay, so making sure that you do have all those parameters, and then we go down, and the rest of it shouldn't matter too much. There is a bit of a slight difference because we are putting 2 different orders in, or I'm going to open 2 different positions. We need to make sure that you won't need to understand this, but we are going to have 2 directions, 2 trades in the same direction. Okay, but that's okay. None of this you need to worry about. It's already set up already. But we're going to enable this, and we're going to apply. And what that will do is it will add the bot to the chart, and you can see I've got all my information up here, my wave crest, and that's from the previous day, but now this will change as soon as that 7:05 time hits. We have the trade settings, so we're not using a break even. We're using previous candle for trail. We're triggering at 3, and we're going to use the last 8 candles to trail. So I'm going to slow this down, and we'll start off our bot. Okay, and we're going to look over here to our left. You can see price is starting to move, which is fantastic. Okay, we still haven't hit that 7 p.m. session yet, so we're going to speed this up a tiny bit. No, nearly there. Won't run it too much faster than that. Oh, now we have. Oh, there we go. We hit our breakout. Perfect. Straight away. We nearly got our. Oh, there we go. We got our 3 contracts filled. Slight bit of slippage there, which is fine. And what I'll do now is I'll slow this right down, and hopefully you'll see. Maybe I'll even zoom in. You can see we have our take profit up here is crazy. If it ever hits that, that's an amazing trade. What I'm actually looking for is something around maybe a 1-to-1 ratio for this trail, or even a 2-to-1. That I'll be quite happy with that. But what you're going to see is as these candles are made, I'm just going to stop this right here. Okay, we have triggered our stop loss, but our trailing stop loss hasn't moved yet, because if you're to look at the last 8 candles from this one, so 1, 2, 3, 4, 5, 6, 7, 8, the low point for those 8 candles is this point here. So that's why the stop loss is there. As these candles create, whether they go upwards or downwards, it'll find the lowest point of those 8 candles. So we'll keep going. So this trade is going in our favor fantastically. We've already pocketed $45, and we have $30 on the table. Okay, But it's only one contract and I'm happy to let it ride. I haven't really got too much of a risk there, which is fine. I'm happy with that. Generally, these are what I like to go to on the Australian Open. Often I'll run this on 2 different charts. One just going for that initial three tick, and that's it, using an initial WaveBreaker. And then on a different chart to diversify, I'll run WaveBreaker version 2. Sometimes I even do a 2 contract on that initial one. But yeah, the reason why I like to have 8 candles and not say 2 candles is because sometimes you're going to get pullbacks. We didn't get any pullbacks yet, and if sometimes you get pullbacks, you get stopped out straight away. So you've got to give that trade room to breathe, okay? Because some people, I'll pause it there. A typical thing for traders to do is once they get a bit of room here, and I know most of you have done this before because I've done it before as well. As soon as you start to get a bit of momentum, you think there's going to be momentum, you'll generally drag that stop loss up and put it behind maybe the second candle back here. Okay, that can be quite dangerous because all it takes is a couple of ticks down and then you're out of the trade, and you could potentially missing out on, yes, a fair bit of money left on the table. Okay, oh, and we can see, yep, we're still going in the right direction, which is fantastic. Okay, the Australian Open, one of the reasons why I like it is that it's not as speedy as the US Open. It gives me time to look at the trades, figure out what's going on. I could even manually close this if I wanted to and still take that $80, $90. Okay, that's one of the reasons why I really like the Australian Open. We have had a bit of a pullback here. That's fine. I'm glad I haven't moved my TP, my stop loss to here, because look, oh, I would have been stopped out if I'd moved it to there. Even if I moved it to, look, if I moved it to there, I would have been stopped out. Okay, that's why it's good to have those 8 candles in play. If I'd done 3, 4, 5, I would have been stopped out. Well, there you go. You saw now the trailing stop has moved up. So including this one, 1, 2, 3, 4, 5, 6, 7, 8. So it's moved to the bottom of this candle here. Yeah, straight across. Okay, still going. Hopefully we don't get stopped out. We'll keep moving upwards. Like this. I like the fact that it had a bit of a pullback. I do like that. Often it comes back, touches that area. Oh, here we go. Now we've moved up. So this candle here, that candle has been removed from the 8. So we have 1, 2, 3, 4, 5, 6, 7, 8. So the low point of that is below that one, which is a reasonable spot to move. We've now moved to above break even, so I'm very happy. We're in the green no matter what now. Okay. So now I'm just happy to let it run. Use the 8 candles and just let it do what it does. Okay. So now maybe I'll just speed it up because we can actually see how far this will actually run. This was a successful trade that I took myself. Here we can see that a new wave has formed. Great, we're going to break out of that. Doesn't impact our trading at all. It's moving perfectly upwards, which is fantastic. Still following the 8 candles, so that's still the low point. Now we're moving up. As it moves up, as it forms an extra new candle, it's just going to slowly move that trailing stop up. The bot will do all the calculations for you. Speed this a bit more. Still haven't been stopped out, which is great. Okay, this is where you maybe, if it was me trading this manually, and I remember doing this, I actually closed this trade out myself. I wasn't too concerned about hitting that take profit. Look, once I got past that initial box length, I was pretty happy with any of this, but as soon as I got these candles, I was happy just to close it off. If I didn't close it off, I could hopefully maybe hit my TP. But you can see there's a bit of a pullback there. Starting to turn around. Maybe it can go up. I'll move my stop loss up. It's automatically, there we go. It's automatically moved that out for me. And look, there now it comes back down. Okay, so I'll stop it there. So that is just trailing with candles. Candles is, you're going to find there's a lot less slippage because you are moving the trailing stop to a safe point away from price compared to that constant amount. Okay, so the other way to trail your bots, I'm just going to move this time back to the same kind of time frame. So moving this back, you can see here to 650. Okay, so I made $485 in that trade. Fantastic. If I could have done it a 2-2, I could have done it 3-1 on the contracts. It depends. Totally depends on what you want to run. Often I run 2-1, 3-1 with my contracts. Okay, so now we're going to go back to strategies. I'm going to turn the strategy off. Another thing to do, you can actually do this yourself, is to just not even have a trail, turn your trail off, but just choose a break-even stop. Okay, so maybe I don't want to go for 3, maybe I only want to go for 10, maybe I want to go for 15 ticks. Okay, but I want to move all I want to do is go for that second take profit for 15 ticks, 3 ticks as my take profit, run 3 1 contracts. Everything else is the same, but I'm not using my trail stop. What I'm doing is I'm using a break even. So as soon as I hit that 3 ticks, or as soon as price moves up above 3 ticks, it's going to move that stop loss to break even. Okay, let's have a look at this and see so you get a bit of an idea what goes on. So we'll turn the bot on. We go okay. We're going to run the bot. I'm going to slow it down a tiny bit so you can see. All right. So we have the box has been formed. Excellent. We do know that it does break out and go successfully to a trade, which we'll see in a second. Oh, there we go. So we still haven't taken the full 3 ticks because there was a bit of slippage there. It actually pulled back. There we go. And you can see straight away, I'm going to pause it there. Once we hit that trigger of 3 ticks and this first initial, the initial positions were closed, our stop loss immediately moved up to break even. So that automatically means that I'm in the green. Okay, I cannot lose. So there is no trail involved. Now it's just a matter of see what happens, and then hopefully it hits my TP. But I can close this myself, but I know that I'm not going to get a loss. Okay, I can speed this up. You can see we all know it's going to go up now, but does it come back and hit our stop loss? No, it doesn't. Okay, so again, they're the trades that you would often see me post on the Discord, where it's a smallish kind of trail, not those massive ones, because often we'll just move my trailing stop to break even, and that the bot automatically does that. Okay, now I'm going to talk to you a bit about the third trailing stop type. So we've already spoken about the first two, so let me just pull up our strategy. So the first one was about using previous candles. The second one was about using just the break even stop loss, and then you can manually move up your stop loss if needed. They're probably my 2 preferred types of stop losses, mainly because of the slippage. The number one thing you have to worry about with trailing stops is slippage with NinjaTrader. Okay, often I get a lot of questions about slippage. When you're moving a stop loss so close to the price action, it can easily spike down or up, depending which way you're trading. And it can, what it will try to do is you try to put an order where price has already moved past, and it will come up, and that's slippage, and it will come up as an overfill, and you won't be able to place your order, and you'll be stuck in a position. So you've got to be really careful with trailing stops. So that's why I prefer the previous candles, just because it's always the stop loss is always moving far enough away from the price not to get impacted too much. And the same thing with break-even stop losses. So both of those are triggered by that trigger. So it's really important you put that trigger at a reasonable place. So now we're going to talk a bit about the constant amount. So what's going to happen now is this trailing stop is going to move up at a constant amount. Okay, it is still going to trigger at that point. So I'm still going to keep my stop loss at 15. I'm using a trailing stop, constant amount. I'm going to have a trigger of 3, but I'm going to trail probably. I like to have it anywhere between 8 to 12 ticks as my trail. We're dealing with 6A here. It's going quite slow because it's Australian Open and it's a US night time. I'm probably going to go maybe a 10. I'll keep it in the middle for now. I don't need to worry about the number of candles because that's a different type of trail because we're using the constant amount. So I'm going to trail by 10. I'm still going to take my take profit at 3. I'll set it as 100. Use 3 contracts from my first and 1 contract from my second TP. Everything else is still exactly the same, but now you're going to notice it's going to be a different trail type. So I'll tick this, get us going. You can see now the bottom, the constant amount. It's got our data. We're currently set at 6:54 p.m. Great. It's not going too fast. We'll start this and we'll see. Hopefully price kicks over here, and we'll see if I can capture the trailing stop. Okay, I'm going to slow this down if I can. Well, there we go. And immediately we've got our price taken and it's moved up. Okay, now what we want to see, I'm just going to pause it there, or you can actually see it already. I'm just going to move this over so you can actually see it a bit better. What's going to happen is as that price moves up, you're going to see this trailing stop just move up. It's not going to worry about any pullbacks. It's just going to keep moving up. But the thing about this trailing stop, it's not going to move back downwards at all. Not that any of them do, but you're just going to see it's always going to keep that 10 tick distance. But if price pull back, it's not going to have that 10 tick distance, so it can get stopped out. Okay, so what I'll do is I'll go quite slow. Hopefully we'll see some price action occurring here. See, we moved up another one. It just needs to move up one more tick above that top and we should be break even. And there we go, we are at break even. So the trail stop now, at least we're playing all the sending money on the table and actually digging into our pockets for now. But you'll see it could spike back down now and we could break out at a break even. Hopefully it goes up. We know it does go up, but we do know there is a bit of a pullback. So we want to make sure that, I'm just going to speed up a couple. Get a bit of movement up, there we go. We get the stop loss slowly move up, which is fine. Which is what we want to see. We want to slowly see this, as price moves up, we want to slowly see this stop loss go up with the price. As we know we have this pullback, which is more likely where you're going to get your stop outs using this trails type. Okay, it's not going to use the candle distances, it's just going to use that constant 10 ticks from the high point. Okay, so the high point is up here, and that's why it's 10 ticks down. As price moves up, it's keeping that 10 ticks. And we can see it's even though the price moves back, the trail stop is still staying there. I cannot remember if there is a pullback here, or if price just takes off. I think there was a pullback. I think we probably will get stopped out here for a bit of a. Oh no, we're moving. And there we go, stop out, pull back. So price pull back enough, and look, it would have taken out a few times. The only way you would actually not get this stop loss taken out is if you use the candle one and you followed the candles. Okay, otherwise it is literally going to just always take your stop loss. Even you're naturally moving up your stop loss yourself, you would generally move it up like this behind the candles, and you would get stopped out. Okay, so that's the advantage of using the candle type for your trail stop. It does give you that opportunity to have that pullback. Saying that, if that had pulled back and gone the other way, you would probably been in a small loss with that candle, the candle trail stop. So look, it's about trialing and error. This is something you cannot really back test unless you use playback like I'm using now. Putting it in the strategy analyzer will not allow you to test like this, just because this is tick data. I've got it set on tick data, and that's the only way we can actually test using our playback. Okay, so you could actually speed this up, look at it a number of different days. But yeah, look, that's the WaveBreaker version 2. I'll say it again, like I said at the start, WaveBreaker version 1 is a bot in itself, and this is a second bot. I've just called it version 2 because it incorporates the 3 different trails. Okay, but if you have any questions, please reach out in the Discord, and I'll see you next time. Thank you.